Hey everyone, this is your Precision Markets office hours, hosted by your Precision Markets coaches, Peachy and Brian. We host these every Tuesday at 12 o'clock p.m. Pacific Standard Time. That's in GMT -7, to be able to have a place where we can answer your questions in a more visual format, more than what we can do on the Discord. So if this is your first time joining the call, the format is that we'll go ahead and allow you to ask your questions in the chat, and then we'll answer the questions in the order that we receive. We just ask one thing, that just be respectful of people when it's their time for their questions, and feel free to come off mute, feel free to share charts, any other things that is necessary for us to make sure that you can be able to answer your question, guys. And with that, we'll go ahead and begin. Go ahead, Perry, and shoot me that question one more time that you were about to say.
Okay.
Now you can talk it out. You don't have to type it.
Oh, can you hear me?
Yep, we can hear you.
Okay. So, to start your, when you're going to trade, your higher time frame directional bias, you just go off that one daily candle, right?
Well, just daily direction overall, but it's all based upon market structure. I'll show you an example. Maybe this might help you a little bit more. Chart. Okay. I don't want that one. Okay. That. All right. So let's put it like this, right? We'll go back to a couple of days ago. That's a cool new feature they added. I like that. So first thing I look at always is market structure. So when price makes a lower high and then a lower low, and then it breaks that lower low. So this would be a lower high spot, and it makes a new lower low. What's the next thing that we're going to expect?
A lower high.
Well, it already made a lower high. And now it's made a lower low. So what will be the next thing you expect?
After a lower low should be a lower high.
Oh, exactly. So essentially, even though price hadn't finished, it would make a move like this, right? Because right here, this is a lower high. This is a lower high already, and then this is our lower low, right? So, and the reason why I say here is because here's a supply zone right here on the daily. So we're expecting somewhere in this region that price might make a lower high, right?
Yeah.
Make sense?
Yeah, I get it. So
but
the candles that's making the lower low. So just say sometimes, like, just say that indecision candle, the one that's coming out the daily supply, the indecision candle, not that one, the next one at the bottom. No, the bottom, right there. That candle right there. So just say, during when you wake up, it's kind of green and it's going up. So would you think that's a buy?
No. The reason why is because just thinking about this, right? 10, this is M15, right? What are you looking for when M15 comes into, when you come into an M15 demand though?
A buy.
Hold on one second. I mean, what do you do when price goes into an M15 demand zone? What do you do on the 1 minute?
Change of character, buy.
Right. And where do you look for your change of character?
Excuse me?
Where do you look for your change of character?
In the zone.
What time frame?
The entry time frame, 1 minute.
Right. So when you get to an M15 zone, you look for a 1 minute change of character. And when you have that 1 minute change of character, your expectation is that price is going to go like this on M15, right? So for me, I don't really care what this candle does, right? But let's go ahead and highlight this candle. I'm going to show you something. If we see this candle, price is going up, it doesn't really matter what the candle does. The candle is really insignificant. But hold on a second. Go back to my daily time frame, change something real quick. So if on the daily, this was that same spot, right? So this was a H1 demand zone right here. I mean, H1 supply right here. And well, not even that's the supply. Supply is really right here. So price ended up making a move from here to here to here. It comes up here, comes up, breaks through, and the wick ends right here, right? So wouldn't it price ever chalk on the 1 hour?
Price kept going in the direction.
Right. So you never had a chalk on the 1 hour, which means even if that candle was going up, it doesn't matter because the when price was right here at this point right here where I put this cross, it looked probably like the daily candle was going up. I don't look at the candle. I'm looking at structure always. So until we crossed over this point right here, I wouldn't have had a, oh, where's my thing? How can I get my buttons to work on this laptop? Okay, there we go. Until price would have crossed here, this is where I would have been bullish. But price never broke through it. So because of that, I would have stayed bearish. And if you look where price was at with this lower low, this was the last H1 supply right here. And remember, I said on the daily, we're expecting price to go up, right? To make a new lower high. But the first thing it has to do is it has to chalk, right? So in order for me to change my bias, I needed to have this be broken. So watch what happens. Price ends up going lower. So we have a break here, right? Now, the next H1 supply zone was this area right here. So this is a H1 supply. At that point, then if this area broke, I'm looking for buys. What did price do? At this point, now I can start looking for buys, right? So I would treat this as H1 demand. If price comes into here, you know, this is the area from which I would start buying, right? And my target really goes up somewhere up here, or go somewhere in a halfway, something like this, right? Let's go let this play and see if it plays out. Never came back in touch. But anyways, what I'm getting at is once you see this H1 chalk right here, this is where you know, all right, I'm gonna start taking buys, and I'm gonna keep taking buys, and I'm gonna keep taking buys, and I'm gonna keep taking buys until we get into this demand zone. I mean, to this supply right here, which is our daily supply, right? So now what am I looking for? So now what am I looking for is my bias will change to start selling when we break this right here. I'll start selling on EU once this demand zone right here, this is the last H1 demand, is broken. And what I'll expect is price to do something like this on H1. Break, come back, do this. And now my target will be all the way past here, right? Because remember, this is the lower low on the daily time frame. So as soon as I see that chalk, and as long as it continues going in this direction, according to H1, I'm selling for the next week or so, or however long it lasts.
You see, that's where I get messed up at. I think like since we're so that was a overall downtrend on EU. So I'm thinking like we have to sell soon. So I'm thinking like, so just say if I get like an indecision candle, like that gray one in the middle of the blue ones right there to the right, to the right. Yeah, like I would think, okay, today's the day to sell. But I guess you just said you keep buying until I guess I'm not treating the change of character on the higher time frames as a lower time frame. I should still be in sync with that.
Yeah, probably everything about the market is fractal, meaning if you do something on the lower time frame, you can do it on the higher time frame. Now, there also is degrees of effectiveness, right? For instance, whenever price wicks, when price wicks like a supply and demand on a middle time frame or higher time frame, I'll still trade off of it. When price wicks supply and demand on the entry time frame, I don't. I treat those totally different, and that's just how I do. So, but also remember, right? Like you really got to understand what is supply or demand, right? So, do you like Jordans?
Mm-hmm.
All right. Imagine you could buy some J's for 120 and you could sell them for 200, right?
Yeah.
Now imagine all of a sudden your supplier started making you buy the J's for 250. Would you keep buying them from them? It used to cost you 120, now it costs you 250 to get the shoes, and you can still only sell them for 220.
No, bad deal.
That's the same way price works on the market, right?
Mm-hmm.
So what did price do? Price made a downward move. I don't care about this doji. Doji means nothing. You can see dojis anywhere on the chart. They mean absolutely nothing. It's all about context. But after I get this 1 minute chalk, this 1 hour chalk, then I see this bullish candle. Now this confirms we're going up. But there was never a supply where it stopped at. So price makes a random doji in the middle of nowhere means absolutely nothing to you. When price makes a doji at a supply zone, now it starts meaning something. Like it's about where to.
And that's where we go. So now on the 4 hour, I will mark a 4 hour supply zone, and then I would think it's going to go down from a 4 hour supply zone, and it doesn't.
Sometimes
so a 4 hour supply would maybe to the left right there. Isn't that a supply zone?
Right here?
Yes.
Yeah, but you also got to remember market structure. Supply and market structure have to go hand in hand.
All right. I never knew that. I never put that in context.
Yeah. So it's like supply and market structure are very close, but they're two separate things, right? So yes, this is a supply, right? Mm-hmm. We're not debating that. That's true. But at the same time, you got I forgot I did change my colors. I was like, where did it go? I forgot I made it a lot more lighter. Let me make this a little bit darker. Okay, there we go. This is a supply, right? But price made a lower low, a lower high. It made a lower low here, breaking right here. And then it goes and it chalks on the 4 hour. It made a lower high. So now demand might be in control, which demand was. Demand tapped in right here and made a higher low. Now what happens? Well, you end up having yet another chalk right here. Not chalk, a break of structure. And so price goes up, it taps into this previous supply. But right now we have lower low, higher high, higher low, higher high. At this point, you're expecting price to go up from here. So price taps into this, makes a new higher low, and today it shot up and made a new higher high. Now, the trend is your friend until the trend fails. So right now, our expectation is price to do something like this, right?
Yes.
But if price starts and does this, and then comes back and it chalks here, well, then now you know, oh, price is reverse direction. Now I'm probably going to expect this. Does that make sense?
That makes sense. So, because I was always thinking, no matter what a supply zone, you go ahead and look for change of structure. Is going sales all day, but I guess that's not the case.
Supplies hold until they don't. Demands hold until they don't. But just like the example I gave you with J's, right? If the price raises to a point where it makes no sense, then you stop buying. You start selling.
Facts.
So that's how the market works too. These banks will decide that, hey, based on some economic news, we think the value of the euro is not as valuable as the US dollar. You start to see from a technical analysis perspective, price does something like this, and then you start seeing price head that way. So now supply is in control. But most importantly, from a technical analysis, it had already followed market structure. Now, I'll give you an example where it failed today. This was NASDAQ. NASDAQ made a lower low here. This is a lower low. This is a lower high. Price has gone through the last supply zone. So it's pretty much closed above. So now I would look for NASDAQ to do something like this and to keep going up. Fake rally because it's based on nothing, because our economy is about to be in a shitstorm. But
man,
but this is how this is how you should look at the market. Like, you got to combine the concepts of supply and demand with market structure and combine them together. And then you go through our course and you learn other things too, like premium and discount pricing. You learn things about like liquidity, like other concepts that you can all kind of tie in together. Because even any one of these things by itself, they're not really that powerful. But when you combine them all together, you can make high probability trade concept ideas. But don't ever like hone in on just one thing, if that makes sense. So yeah, price comes to a previous supply zone doesn't mean it has to turn around. Look at market structure. Yeah, market structure is going, but that when it gets to a supply demand zone, it gets stuck. Like, they kind of work hand in hand, if that makes sense.
Yeah.
And like supply and demand, like, will always like give you that first hint of where price is going to go. So as much as when you put in that new low and you want to play that reversal, the 15M or whatever middle time frame that you like to use, whether it's the 1 hour, the 15M, it's going to give you the first sign that it's going to pull back. So you can get that pullback. So that would be the likes of supply breaking when we put in the new low, either on the 4 hour or the daily, and starting to see that pullback. When supply breaks, demand takes control. You can now assume, you know what, we're starting to pull back now. So supply and demand will give you that hint that, you know, things are about to begin, especially when it comes to pullbacks. Or now we've come into that daily zone, as we've seen today. We'll start to see a break of either, you know, the 15M or the 1 hour, depending what you're using. Once demand breaks, we can start to presume that objective of the daily, that pullback objective, has now been completed. It's time to short, as Brian showed there, about supply being in control after that. So that's the good thing about supply and demand. It'll give us the first sign of the reversal or the continuation.
Got it.
Yeah. Precision Coach Nate in the house. Got a boy back.
Yo.
Now, I'll show you a good example. I'm going to show you the 4 hour. I use daily because sometimes when I couldn't find a good example here, so I was really trying to show you one. But this is the exact reason why I started using daily instead of 4 hour. So when price chalked here, price broke here on the 4 hour, right? This was a 4 hour demand zone. Now, your time frame pairings depends on what time frames that you're using. Hold on 1 second, guys. Sorry. I got all my lines coded on different time frames. Give me the break. Right time frame. Okay, cool. So if you use daily, the hourly is a good middle time frame, like Nathan mentioned. If you use 4 hour, 15-minute is a good middle time frame. So price chalks here, right? So that was the chalk from the higher time frame. So price goes up. So now what I want to see, well, the first thing you want to see is this is where the price made a higher high on the 4 hour. Well, on the 4 hour, this was the last demand zone. I mean, on the 15-minute, this was the last demand zone. So here's the M15 demand. It got broken, right? And so now we know that this M15 supply was in control. And so price goes in till it gets here. Well, I don't see a valid pullback specifically. So price kind of ranged in this area right here, right? But what I was looking for was, oh, here it is. Perfect. So here we end up having, here was the last M15 supply going into this tap right into this, going into this tap into this H4 demand. And then what ends up happening is the supply got broken, right? You see that?
Yes.
So now we know that demand is in control. So now we have this M16 demand. Now what happens? Price reacts, price continues to go upward. Everywhere there was demand, you could be buying. So this is the buy that I missed this morning because I was playing around with my website and I am hurt. I would have had 44R today. There was another demand. I think this is where Nathan caught a trade. And then you had yet another demand. And so but you see how all this is a basically order flow is what we call this, right? So I'm not looking specifically too much at structure on the middle time frame. I'm really looking at the demand. Some people look at structure. I found just for me personally, it was easier for me to say, all right, it's supply and demand in control. And I can see the order flow of demands being held, supplies being broken. But when you go to the 4 hour, all that 4 hour was a bunch of candles back to back. And even look right here, what do we have here? We had a doji in the middle of fucking nowhere. And so that's why I say like the candles, there's a context to the candles too, because you can see a doji anywhere on the chart, anywhere. But they don't really have too much context until you combine other concepts with it. That really helps you get to know, oh, so all this doji meant to me was that there was a battle between suppliers by sellers and buyers. Buyers narrowly won. Buyers came in. Buyers were really hot. Buyers said, you can't stop this. Buyers saying, ooh, you know what? I think the price might be a little bit too high. And it makes sense because we're at a daily supply anyway. So
yeah, because GU today had, like, when I woke up, it had a red bearish candle. And then so I thought it was like a reversal. It looked like a reversal, like a bearish tweezer top. But and as price kept going on, it started being bullish. And it just faked me out. So I should have just been looking for buys. But yeah, I guess the candle really doesn't matter. I thought it was going to be a reversal.
I think what will help you is always keep in mind market structure. Keeping in mind market structure for direction. It's going to help you nine times out of 10. Sometimes you'll be wrong, and that's okay. But at least it gives you a general bias and idea, and that'll help you not be getting faked out and going the wrong direction. And then when you combine market structure with supply and demand, and then use those zones, so supply and demand zones really kind of tell you where market structure might reverse, where you might get reversals, because price is like the whole thing of the market. It's a big tug of war game. There's buyers and sellers. Sometimes there are more buyers than sellers. Sometimes they're more sellers than buyers. But ultimately, the banks, they be on these 4-hour and up time frames. That's where they make their decisions. They decide this is the price target that we want to hit. And when we get to this order, we're going to drop X amount of orders, right? So even though this is a daily, but like what I'll show you is like, this is the 4-hour, right? Look at how consistent those bullish candles were, right? Mm-hmm. Now, I'm just going to highlight the same region and look at this on M15. I hate when it does that. It's following my settings, but I need to make new settings for this call. There we go. All right. Now, look at that on the M15 time frame. What do you see?
Higher highs and higher lows.
A lot more candles on top of that. I mean, sometimes price went down, sometimes price went up, sometimes price pulled back, sometimes price went up impulsively, sometimes price did, sometimes price moved correctively. Like, look at all this noise. That's a lot of noise, right? Mm-hmm. Let's make this even worse. Let's go look at it on the 1 minute time. This is why we say stick to the higher time frame. You get lost in all this, you might think this is a reversal. You might try to sell here. Next thing you know, you're selling every time you see a top, and you're taking loss after loss after loss. Like, and it's all the same thing. Like, this is the 1 minute, as you know, as busy as it is. This was 15. Okay, a little bit easier to understand, but this is the 4-hour, bro. This clearly looks like it's the buyers are in, right? Mm-hmm. So that's why we always say, you got to have a higher time frame bias. That's literally why I put this at the top. Higher time frame bias. I find my points of entries on my trading time frame or middle time frame. And when it comes to one, I'm only looking for chalks, flips, breaks of structure, places for me to enter a trade. That's it.
Yeah.
Does that kind of make sense though?
Nah, I got it. That was messing me up. So yeah, that's good. It makes sense. Thank you.
Awesome. All right. Janice, let me know in the chat that made sense about knowing where to buy and where to sell.
I'll break it all down for you guys, right? Every single demand zone was created by Brian, all right?
I wish, man. Trust me, when I get to that point of being a market maker, I will tell y'all, I'm gonna be like, this is the official Precision Markets pump and dump.
That would be so sick. So sick.
When I say
we'll all end up in prison. Oh, God.
Jonathan, did that kind of make sense about market structure and zones as well? Structure, we definitely has a high level of importance. And I think structure is important not necessarily, depending on whatever system you use, right? But you got to have some type of concept of structure, because if not, you're going to trade both ways, both signals, and you'll end up maybe getting some wins, some losses. But you got to have some type of concept of, all right, the structure of price is going one way or another, and when it gets to that point, once it completes whatever it needs to do, then it does something. It either changes direction or starts a new objective, etc. So you'll find different systems, different ways. Like in Precision Elite, there's a different way of looking at structure that won't look at it like kind of like supply and demand as much. Whereas supply and demand even allows, we look at structure, from kind of a market structure standpoint. So, and it's based upon, candle body breaks, but there's still a concept in structure, whether you do elite or whether you do supply and demand trading. So like these concepts, the way you do the systems can change, but the concepts really don't change. You're going to have a direction that you think price is going to go, because ultimately there's only two types of trading strategies. There's grid-based trading, which you'll find more closely for elite. And then there's trend-based trading, which is more like supply and demand. And we make money in supply and demand when price tends to go a certain direction. So like today's move, was beautiful. I mean, really beautiful. If you had, for instance, caught in where I was looking to enter, I had a demand zone thing right here. I was looking at price right here, and there was a beautiful entry. Notice how price moved in the same direction, like except 8 candles. Well, all of this would have been like 10, 15 R for me based upon my stop loss. And then this would have continued in the same direction. This would have given me at least 40 R trade today, but I happened to miss. But overall, you see it trended in the same direction. When the market doesn't trend as much, strategy isn't as effective. So you just have to kind of know where your strategy worked the best. All right. So a chalk have to break demand. Not exactly, but you don't want to look for a chalk just in the middle of too much anywhere. I look for chalks when we get higher highs, higher lows, lower highs, lower lows from a higher time frame, coming into that middle time frame. I look for chalks and breaks of structure when we get into whatever kind of supply or demand zone where I'm looking for entry. Those are the places that I look for. Let me know if that makes sense, Jenna. Oh no, Perry, I don't use.
Hello?
Yes. Mm-hmm.
Hello?
Mm-hmm.
Hearing me?
Mm-hmm.
Yeah, I was saying a while ago, you said about when the chalk breaks the demand, did you say under 15 minutes? Yeah, something like that you said. So it's like I was thinking, So I'm saying to myself, when I do my mark up my chart on the 4 hour, then I go to the 15 minutes, and when I see the chalk breaks the demand and it will test back, that is when I will take the trade, right?
So when you're going on your 4 hour, right, the first thing you want to say is, all right, if we go here, I'm trying to find a good example, but say for instance, here's your demand, right? 4 hour. When price comes into a 4 hour demand, you want to see on the 15-minute that you get a 15-minute chop, which
I understand that.
Mm-hmm.
But no, what I was saying is the point that you made a while ago, when for example on the 15 minutes, right? Then if sometimes you will see something look like a chop, but it doesn't break it doesn't break a demand, because it have to make a higher high to break the demand, right? You understand what I said?
Give me 1 second. I'm trying to make sure I understand it, because I think I don't. I think I'm gonna mess it up. Say that one more time.
Okay. For example, let me show you. Okay, I was gonna show you something. Okay. Right now I'm looking at EURCAD, right? Okay, just it more to explain it a little bit to see if you can understand what I'm saying. Okay, on the 15 minutes, right?
Mm-hmm.
When I see at the top of it, I can explain it to you the way you explain it. At the top of it, right, you will see where it break. But I wouldn't consider that a chop because to me, there wasn't like a higher high, like a candle didn't break above, right?
Mm-hmm.
You understand what I'm saying?
If price breaks a supply or demand, that's also considered a chop.
No,
It's depending on the right spot.
But
So
if it does,
so say for instance, price is moving like this, right? Price is moving upward like this. And the last thing it had was this high point right here. You have a demand because in order for it to have broke this previous high, this had to be a demand. So if price ends up going past this, you've gone past this low spot right here. And it'll probably come back to a supply or whatever and then continue downward, right?
I understand.
This was your
that.
break.
But what I'm trying to, because of what you said a while ago, like about the demand, I'm telling you, like, okay, for a good example, if EURCAD, right? Like a candle did not break, like it's just a wick above, right?
Mm-hmm.
It didn't create a demand because no candle didn't break, it was just a wick, right?
Mm-hmm.
So that is what I'm trying to find out, because as I'm looking at EURCAD, right, I'm seeing that, yes, I draw a line. I'm just practicing. I draw a line. But to me, that line wasn't a change of character, because to me, it didn't break. No candle didn't break above it on the 15 minutes. I just wanted to right, I'm on the right. I am on the right track.
You're on the right track. I don't. If a candle doesn't break above or below, I don't treat it as a chop.
Okay, on the 15 minutes, right?
Mm-hmm.
Yes.
15 minutes.
That's
what 4 hour.
Okay, that's what I wanted to know, because I just got some clarification because of what you said about the demand. So I'm realizing, hey, even if the wick didn't break above, the wick break above the week before, that is not a chop because no candle didn't break above it.
Yeah, I get what you're saying. Yeah.
Okay.
Yeah. Mm-hmm. So no, that's the I mean, everybody does it differently. That's just my rules, just based upon what I tested. So
okay.
But no, I don't think you can be on. I don't think you're on the right path.
Okay. Thanks.
All right, Jonathan, we'll have the recording up so that way you can watch it again, and we'll make sure to tag you on the link. Perry, I don't know if you heard me, but no, I don't use 4 hour key levels. That's just personal decision. For me, I can just more clearly see things on a daily as comparison to 4 hour. I find myself getting really confused on direction on the 4 hour, so I just switch to daily. It's a higher time frame. I mean, as long as you're using 4 hour daily to get your bias, you're pretty much not going to go wrong. I mean, most times it's going to be, everything in trading is about, probability. You don't get anything 100% right, but you want to be on the right side 8 times out of 10. So
I have another question.
Mm-hmm.
Okay, on the daily, right? On the daily, okay. If you mark up your supply and your demand, right?
Mm-hmm.
Okay, so are you saying that the candle, because I don't really go on sometimes I go on the daily just to have a clear understanding of the trend direction, right?
Mm-hmm.
But okay, for example, sometimes you see the demand is the supply is so high to get there on the daily. Okay, so when you go on the 4 hour, you would have to say if you take a trade at from the daily, right? From the demand, sorry. on the daily. When you go to the 4 hour, then you will have to wait for that. Would you have to wait for that for it to hit the supply, or you have to take partials gradually while the trade is running?
I mean, that's a personal decision, really, how you decide to do it. I mean, there's a lot of variables in that make it harder to answer that question, because one, it depends on how you pull the zone on daily. Some people pull their zones like this. Some people pull the ranges like I do. So maybe price doesn't come up this high, but maybe price does come into the range. Some people pull the supply plus any fair value gaps that they see. And so here we're still in the demand. So one, it depends on how you pull your zones. Not everybody does it universal. There's about 3 different ways you can do it. Secondly, if you're taking a trade from a daily and 4 hour, I wouldn't even do that, because there's not enough time difference between the two. So there are what you consider some really good time pairings, right? So if I use, for instance, like a higher time frame as the daily, then my middle time frame most likely should be the 1 hour. If I'm using the 4 hour to be my higher time frame, then a 15-minute or even 30-minute would be a great middle time frame. But when you start using time frames that are too close together, you don't really get the effect, because what you're supposed to be getting is supposed to look like this, right? I'm going to show you how I did this, right? All these candles are consecutive, right? Meaning they're one after the other. They're all consecutively bullish candles. Let me turn this on before I forget. But if you go down to the 15-minute, price didn't move in a straight line. Price moved up and down and sideways and down and up 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 and down and up. So even though this was the 15-minute time frame, on the 4 hour, you don't see all of that. All you see is a straight line. That's the benefit of having the candle, of using the time frames like you do. So if you have a trade that you take that's based on a daily time frame, and let's say, for instance, you took it from the 1 hour, then yeah, you probably take some partials, you would take some stuff. It just all depends. Like, how you manage your trades is totally a system that you have to come up with. I could have gotten in for a trade since I used the daily. I could have waited for this little area around here, and I could have, for instance, taken a trade, because I'd used like 15-minute or 1 hour. I could have taken a trade over here. Let's say, for instance, I took one here. I could have literally held my trade all the way into that daily supply. So let's say, for instance, I take something like this. I could have held this trade for 20-something R, 20-something plus R, right? And I could have decided, oh, every 5 R, I'm going to take some partials off. Smart thing to do, because then that way you're not putting all your hope into one direction. But I mean, also at the same time, it's not a bad idea to hold, pretty good volume if you're trying to maximize your risk reward. But you have to come up with a system that works for you, because everybody in this group does things differently, right? Like, I don't take partials. I just don't like it, period. I'd rather just break even, or just break in with lower profits. But I move my stop loss up. Rob takes partials. Nathan, I think, does something different himself. So like, we all do different things when it comes to how we manage our trades. I hope that makes sense.
Yes.
Okay. Awesome.
Oh, one more question. You don't have any video about how to take partials and you don't do this, and how to move your like your stop loss? You don't have videos?
There should be a video in the course that talks about management. I'm gonna find. I know we have one. We have one on taking about partials, about the power of 5 R. I'm gonna find it, and I'll send it to you in Discord.
Oh, I've not watched that one yet, though.
Okay.
I've not watched it. No.
I'll find the link for it, and I'll send it to you in Discord.
Okay, thank you.
No problem. All right, Perry. Prices sales for the day, but we're in an uptrend. What period were you talking about, Perry?
No, I'm saying, so just say the 4 hour daily time frame. Well, it's like we're in a bullish. Okay, just say non has been sold for the past month. So, but and there's expectational order flow. The lower high, is if it's creating a lower high, we're buying. We're buying for that day. So I'm just saying, like, is there a way that we'll know that it's buys that day?
Well, yeah, just knowing market structure. And what I mean by that is really understanding what market structure does, right? So say, for instance, all right, let me give you a better example. I'm sorry. I'm gonna change this up real quick. Right?
Like we're in a downtrend, but today we might be looking for buys.
So I'm gonna give you this as an example. All right, so here's a lower high, right? And price made a lower low, right? And then say, for instance, since I'm using the daily time frame, we got a 1 hour chalk, right? Yeah. Now, because we know exponential order flow, after price makes a lower low, what does it have to do?
Lower high.
So we know that this is a supply zone. The most highly probable place it'll reverse is here and then do this, right?
Yeah.
So from here on, until we reach this area, I'm buying regardless of what I see. Which I would have made money that day. I would have made money that day. I would have made money that day. And then this was the news. Then price reversed. So now at this point, it tapped into our supply zone. It's giving me a 1 hour chalk here. I'm going to continue selling because I know price is going to go past this point. So at this point, now I've switched to sales. So I would have probably made nothing that day, probably maybe taken some losses, probably would have won that day, probably would have won something that day, maybe break even, who knows that day, maybe get some more sales, but I'm still selling. I'm still going to continue selling and continue selling and continue selling until now. All right, we got a chalk here. All right, now I'm going to buy.
Ooh, okay. We have a 1 hour chalk in there.
Mm-hmm.
Oh, wow. Okay.
So, I mean, that's the real mastery of market structure. Like when price is here, and I see people say this in the chat, and they'll say, well, we're in a downtrend, so I was looking for sales. Yeah, that's technically true. We're in a downtrend, but you have to wait for price to pull back to make a lower high. There's a thing called directional bias, and there's market structure. The trend is bearish. The directional bias is buying. Two totally separate things. So my bias is buying until I get to a spot where we're going to create a potential lower high. And after that point, then I'm going to go back to the trend's going to follow. So another way you may hear this is what's called an impulsive wave, is when price moves with the trend. And this is called a corrective wave, when price moves to counter the trend. You have to know what phase of market structure are you in.
Got it. This might be the webinar that everything clicked for me.
Glad to hear it. Shoot, I'm gonna stop hogging this screen and turn it over to Nate so he can share his trade for everybody.
All right, can you hear me? Yeah.
Loud and clear.
Awesome. All right. Well, basically, this is what I was looking at. So in regards to structure, we all know, like we've just been speaking about, we've got bearish structure. So looking at the daily, we can see we're bearish, right? So this is my lower low, lower high, lower low, lower high, and the new lower low over here. So it's kind of expecting this area to get tapped at some stage, for the simple fact that we've obviously started to see that retracement. Down here in the 4 hour, we got a break of supply. So that was kind of the first instinct, that we would see higher prices. My 4 hour leg is also the same as the daily leg as well. So I was hoping that we would come to about 50% of this area, which we already have over here. So I kind of missed the buys this morning. I believe you were looking to get into them as well, Brian. I was kind of late to the party in general, but yeah, so this is what I was seeing. It was somewhere in around this area here. I've seen some of these pullbacks from these supply zones over here, and I was on the 15. We were getting that bullish momentum to the upside. Obviously, we can see demand on the 4-hour is in control the whole way up. It's in control, in control. So we must follow the bullish order flow, right? That is in line with our structural expectation of putting in the pullback, the higher low, and hopefully to put in a new lower low. Sorry, lower high, not higher low, Jesus. Yeah, so basically down onto the 15, I was looking at this. I think there was some buys in around here this morning, which I didn't get into. I think there was something as well in there. I came in at this stage here, so I was super late to the party, but I managed just to grab a quick, I think it was about 7 or, and that was it. So basically, I found this little zone here, and it's not the nicest zone, to be honest, out of all areas. We had this kind of like this push up, and price kind of paused here, came back up into this supply zone. When I seen the break of this high, I was like, okay, it's a demand zone, it's valid, but it didn't sweep liquidity. It broke somewhat structure, maybe, I guess you could say on a lower time frame it could be structure, but look, it's not the sexiest of all supply and demand zones, right? Didn't really do too much. But if I'm willing to get liquidity before my entry swept, I will take the entry, right? Because this zone didn't sweep anything, I was kind of expecting to see something like this. Price come down, sweep that zone, come into something down here, then take off, right? Because I'm big into my liquidity, as most of you know. So that's why you'll hear me mention inducement a lot and all of that sort of thing. So the entry criteria for this specific zone was it didn't sweep any liquidity, so it's a chance it could be swept. However, I can trade from the zone if liquidity gets built up before mitigation or during mitigation. So as we could see, price popped down, whoops, into the zone. And what did it do, right? Start to see this sort of action here, right? We created this low, right? Equal lows. Now this is totally fine for me. The fact that I created equal lows right here and decided to sweep them, it then broke supply. Sorry, just broke supply right here with this wick. Now I use wicks as for breaks. It's totally fine for me. Test it out yourself before you get into it. I know the body breaks are a little bit higher probability, but because I add in the inducement theories and stuff like that, I don't mind to take the wick breaks. So for me, that was a break of supply, quite easy right there. And my entry, I decided to use half of the area of this, about half of that zone. I got filled slightly higher in and around here. It came quite down and pushed up quite aggressively. Got filled in there. I believe it was about 5 pips or 4.9 was my stop loss. And I just targeted, like I was saying before, that daily bit of supply right there. It definitely wasn't 10 or I must have, I refined that zone, sorry. I refined that zone slightly down. It was actually, I had my area down here at that whole, it was a weekly sell, buy to sell wick. And yeah, I just targeted that. That was enough for me. I try not to get greedy. And especially when we are coming into a weekly buy to sell or a daily area, that's when we can start to see price melt. So just like, I believe it was it Perry that was asking about like a sell scenario as well. Like in this sort of area, right, this is a high quality supply zone. So if we see some sort of break of demand inside here around this low, we could start to see super sells. Now, I'm not going to predict the market, but this is where price tends to, break demand, pop back into supply and absolutely melt. It can be anywhere inside this area. I'm not trying to predict anything, but in this sort of scenario, we'd see demand break and we could put in that new low for the daily. But outside of that, that was basically today's trade. Nothing special, nothing great about it. Quick 6 or that's me out of the market for the next 24 hours until Brian throws in a few lots. But yeah, so that's it, guys. Any questions on that?
I totally understand. Thank you. I get it.
Yeah, awesome. How long are you in the group, Perry?
This is my first month.
Awesome, nice. And are you enjoying it? You finding it okay?
Yeah, it's wonderful. And then I always wanted to trade with fundamental because I see people get a lot of money with. Like, I know I see people are scared of the news, but they only scared because they don't know about it. So, and it's been very lucrative. I've been seeing, like, wow. So news and technicals, I'm learning that as well. So it's nice.
Yeah. Brian's your man for for fundamentals as well. If you need any news report or anything, this guy has it underneath his belt. He'll fucking explain everything you need when it comes to
also
news.
These technicals are that everyone's teaching in the group is very dope as well.
Yeah, well, we a lot of us trade, like, we all trade the exact same concept. Some of us have a little bit of our own twist on it, but at the end of the day, it's structure, supply and demand, and that's pretty much it, you know.
And also, I believe my downfall, I was trading too many pairs. Like, I'm new at this. So I went down to just 3 pairs and just the dollar, just to see what the dollar is doing. I was doing too many pairs.
Look, that's probably like one of the best decisions you ever made. I'll tell you, for myself, I only trade 1 pair, and I've done it for the past year. That's Euro USD. I've tried going on to other pairs, but because I know this one so well, I know how it moves. I know how, you know, what sort of situations it can be aggressive or non-aggressive. I just know this pair inside out. So I'm totally like fixed on this one, you know. So the less pairs, the better. When you're starting anyway, you know. But yeah, that was a good step you made for sure, bro.
Thanks.
All right, I think that's us anyway for the sesh. Anyone have any more questions maybe before we leave, or?
Guys, thank you all for being this so chatty and for the questions and such. We definitely have enjoyed it. Hope y'all got, you know, a lot of knowledge or insight from this. So if there's anything that we didn't get a chance to cover, don't hesitate to ask us in Discord, guys. We're there for you. Nate, myself, Marco, Peachy, all of us, Rob, we're all here for you. We want to see you succeed, man. So let us know what we can do to help. Now, if you got some other questions that y'all want to see answers to, don't forget on Thursdays we have the Power Hour call with Rob. It's going to be at 12 o'clock Pacific Standard Time, GMT -7. And don't hesitate to also sign up for coaching. We have coaching for all of us. Nate, myself, Marco, BG, Rob, we all do coaching to help you one-on-one. And so we can really go in depth with some things that you're trying to figure out or experience and be able to understand like true mastery of it. Because everybody, you can learn a lot from every person in here. Like, we spend a lot of time to be able to make sure that we master these things, so that way we can be, you know, a good teacher, and that you can learn them as well. So with that, guys, Rob will let us know when it's up and in Teachables, but you can watch this recording for the next 48 hours. Watch it 2 times, watch it 3. You'll pick up something new every time. So with that, thank y'all, everybody, and we'll chat with y'all on Discord.
Thanks, guys.
Good luck in your tradings this week, guys.